Namaskar. Welcome to yet another episode on Beyond Headlines with Apoorva and me. IPO, initial public offering or public issue, has been a very popular mode of raising funds in India. It has also been very popular with the retail investors because India does have a very retail equity culture. But if we look at the trend in the last few years, IPOs, the initial public offerings by companies, have been falling year after year. It started with a low of just 5 IPOs in 2014, and the amount that they raised from the public was just a mere 1,193 crores. It, however, went up to 58,075 crores raised in 2017 out of 35 IPOs. I'm talking about calendar years. So it did go up in 2017, but thereafter it has been falling. This year, 2019, so far, we've had just 4 completed IPOs with just about 6,000 crores raised from the public. If we go by a calendar year, these are the figures. From a financial year perspective, while in 2018 financial year, there were 45 IPOs, in financial year 19, we've had only 13 IPOs. What I'm trying to say is the popularity of IPOs as a mechanism or a mode for raising funds, for the investor also to invest funds, seems to be going down. It also matches with what we are seeing as a long-term trend in global equity markets. As a mode of raising funds, it seems that the instrument is losing popularity. If we look at it from a promoter's perspective, it could be that IPOs are not in flavor because fresh investment in the Indian economy has been at a 7-time low. Popularly, an IPO comes into picture, a public issue comes into picture when a company is coming out with major investment plans. There have been no major investment plans. There have been no fresh investments coming in India for the last 7 years, a matter of huge concern. Yet another trend that we have been witnessing is that promoters have been averse to listing their companies on stock markets. So the number of companies listed on the Indian stock markets have also gone down. It all indicates that one of the most popular modes of raising funds, which used to attract equity investors in India by the millions, seems to be going down. A lot of these trends seem to be only pointing to one direction, a question mark on IPOs. I have Apoorva with me to discuss. Apoorva, your subject. Markets. Yes. What do you think is the trend of IPOs and why is it in that direction?
So, Akhilesh, the trend of the IPOs, like what you just summed up, is absolutely true that the decline of the number of IPOs is visible. And there are multiple reasons for it. One of the most important reasons that we consider is that there are alternate avenues that a promoter has for him to raise capital. Few years back, we did not have very active, vibrant private equity ecosystem, which is what is available now. Given all this, there are easy options for a promoter to raise capital from, and that is also one of the reasons why there is less reason for me to look at only IPO as a market.
So, if a promoter was to approach a P, a private equity investor, as I understand from you, the advantages are you don't need to undergo the rigmarole of listing.
Yes.
You avoid the cost of listing.
Agreed.
And probably all that reporting, accountability, etc. from a regulatory perspective shrinks.
The second part I will immediately agree. But Akhilesh, what happens is that getting PE money also is not that easy. A promoter will have to really slog it out, if I use the word, to be able to convince an investor, a single large investor or a group of 2 or 3 investors, to give the quantum of money which IPO could give them.
Okay.
So I am not saying that IPOs were a bad medium of raising capital. It all depends upon the kind of businesses that you are. What typically happens is, as a promoter, I might think that, I might require money 2 years or 3 years down the line. And if at that time the equity markets are not conducive enough for me to raise capital,
right,
then it makes sense for me to approach a private equity fund and look at those options rather than looking, and I'm talking purely from a promoter's angle. I might opt for a PE fund at that time, work a little harder to convince few or one, rather than going the rigorous route of an IPO.
So that was a promoter perspective.
Yes.
I want you to give me the retail investor perspective, where, you know, somebody individually invests money, does all the trouble of filling in an application, and then what happens? What has been the experience in the last couple of years in terms of disappointment or the rejoice of a promoter, of a retail investor when he applied for IPOs?
So there has been less reason for a rejoice as far as the investor is concerned.
So the investor has actually been let down.
On a count basis, if I look at, the investor has lost more money in IPOs or more number of companies.
So he lost money because the price at which he bought the shares in the IPO was far more than what he got when it got listed. That's what we are saying.
Yes. So the listing, and most common investors that we see in the retail segment are the ones who always used to traditionally also apply into IPOs for listing gains, as we call. Listing gains have disappeared in numbers, if I look at.
And which are those listings that you might tell us? Companies which lost big time on listing as far as the investors were concerned.
So there have been quite a few cases where we have seen on listing they have lost money. If you look back in last few years, a very high profile company, I mean, we had companies like A to Z Maintenance and all.
Which is a Junjunwala company.
Yes.
It lost on listing.
Over a period of time, these are the companies which have lost money now, if you look at. Ireland FS Transportation is another such company where we've seen this erosion. It's not that investors did not get a chance to exit out in between, but a lot of people were building portfolio on IPO stocks alone as a theme. Invest in IPO and hold on for long, assuming that this is a 10 rupee or an equivalent of 10 rupee that you're buying. Those kind of things or those kind of buy and hold strategies have not worked.
So tell me, the retail investor still exists. Okay,
they do exist.
IPO failing or not failing, is he gravitating towards SIPs, mutual funds, or what other alternates?
So I believe that SIP and mutual fund is a different segment altogether, and IPO investors' allocation for IPO is not shifting to other asset classes or sub-asset classes very easily. He still prefers the IPO route. But now what has happened is that a newer segment which has emerged, lot of, at least the HNI segment has this option of investing in what we call pre-IPO.
Okay.
So before the IPO, there are some of these stocks which are available in the market and they can actually participate in that rather than waiting
legally and officially participate.
Yes, absolutely, yes.
Okay.
Right?
But so, then the entry size might be higher.
Entry size would be
you can't be a retail investor. But a ticket size of, let's say, 25 lakhs minimum.
No, it could be even lesser.
Okay.
So if I want to take a call on an individual company, and if I feel that this company, which is likely to get listed in 2019 year end, I want to take a call now, that my investment could be even a lakh of rupees also.
Oh, right, okay.
So that
those kind of offers are available.
Those do exist.
Okay. So they in a way compete with an IPO.
They do compete with an IPO. But
okay.
The traditional mindset of an IPO investor to invest only for listing gains, that seems to be getting vanished very quickly.
But then I have a question to you, Apoorva. If you see the trajectory of IPOs that we just spoke, 2014 was, one of those years when investors were disappointed with India. Yes. The Congress had, there was just no willingness or belief in Congress as a party. The party in power changed. So 2014, if you see, the political mood was very despondent. So we had just 5 IPOs. I'm talking of the calendar year.
Right.
2017 was a peak euphoria, according to me, as far as expectation of the BJP were concerned. So you had 35 IPOs, 58,000 crores raised. So to what extent, in your opinion, the prevailing political mood impacts the intention of a retail investor to invest or his expectations out of an IPO?
So I would put it this way, that the retail investor will prefer to invest whenever there are opportunities available.
Okay. Irrespective of the prevailing political mood?
Yes, to a large extent, the participation would be there if there are options available. In the last 5 years, if I look at, there have been only 2 instances where the IPO would not have got the subscription amount itself and it would have failed.
Oh.
So in last 5 years, if you've seen only 2 such cases, that means that the subscription happens if the IPOs are available in the market. Also because of the fact that these promoters also do good enough homework before they come and hit the market. Pricing could be an issue, expectation of the investor could be an issue. Many a times it may also happen that the private equity investor could be exiting at the time of the listing, and then there are no takers for those kind of stocks, and then the markets actually crash. So listing gain apart, there are some other interesting things for us to talk about. In the last few years, if we look at, and since I'm talking of since 2010 till now, there have been almost about 50 companies where the erosion has been more than 90%.
Of the IPO pricing?
Not on the listing day, but as of now, if I look at. So IPO stocks out of 214 odd companies that have come and hit the market, nearly 50 companies out of that have seen this kind of erosion.
So if I bought or I applied for an IPO share in those companies,
yes.
I let's say bought a share for 100 rupees, it was allotted to me,
yes.
today it's worth 10.
It could be worth 3 or 4.
It could be worth 3 or 4.
Yes.
That's a huge erosion of
Absolutely.
shareholder capital.
Absolutely.
Then why should he invest?
So the investor should not invest in all the IPOs that are available. He will have to be a lot more choosy. The problem is that most IPO investors have the habit of investing for listing gains. If you invest in all IPOs that come and hit the market, you're going to be average of all these and then you will end up losing money. If you are very selective, cherry picking only few IPOs for you to invest in, only thing that you will lose out is the interest opportunity or interest cost on that kind of an investment. You need to be very choosy. And the traditional style of investing is not going to work in this fashion, where you keep investing on each and every IPO.
Or you can't just go on market rumors.
Absolutely.
Or just a recommendation from a blind source.
No.
I'll get you back, Apoorva, to one issue again. Why such a large activity of IPOs in 2017? You're talking about 58,000 crores raised versus 2019 so far. Again, what would be the real reason why IPOs have gone down this year?
So, Akhilesh, one reality is that promoters also feel like hitting the capital market at the time which is conducive for them to raise the capital. And there is always going to be a time lag for their preparedness to come and hit the market. Right from filing of papers to SEBI to constantly being in touch with merchant bankers and all, it requires time. So even though I may be very bullish today for me to raise the capital, I need to think about and forecast the market conditions 6 months down the line for me to be able to take a call today that I will come and hit the market, which is where promoters find it little difficult. So 2017 was a year which if we were to use the word euphoria in IPO market, that was possibly the result of what would have happened 6 to 9 months prior in terms of their comfort on the market. They approached the market with that mindset that the markets will be good, and fortunately markets at that time were supportive. Also, there were a few other things which were happening. That was a period where there was a reasonably good boom of what we call pre-IPO funds, which were raising a lot of capital from the market. So there were investors which were coming in pre-IPO stage, IPO not too far. Obviously that fueled the kind of rally. And now with the current scenario where IPOs have seen to be drying out, nobody would want to take an election call. So 6 months, 9 months prior, if I am a promoter, I would say that I will wait till the election results to come out, then look at whether I want to raise capital through an IPO or not. In the interim, if I have any need to raise capital, I might go to a PE fund and present and take my money. So to that extent, this CISO is logical.
I have a question to you, Apoorva, on delisting.
Yes.
I think, correct me if I'm wrong, it is those companies which are inherently valuable and probably a promoter is far more confident that he prefers to delist himself. Okay, does it not mean that good paper for the retail investors is shrinking to that extent?
It is true. Let me put it this way, that usually speaking, the management who have confidence in terms of running the business thereafter and doesn't want to go into public to raise capital again and again, because you will be dependent on market conditions at every given point of time.
Right.
When I am confident of running the business, but I don't want dependencies of the market for me to run the business, I would prefer a private equity route. So even globally, if we look at, and this is a scenario which is global as well, after you're doing very well, and if you feel that you can delist and still continue to run the business very well, there is value in being unlisted also. And to that extent, I will agree to this, that the investor will have a shrinkage in terms of opportunities.
So good quality paper to that extent, the investor gets denied.
Yes.
Now, as far as delisting is concerned, Apoorva, in India, we are seeing a trend, as you said, the numbers are going down. They are matching also with the global one.
Absolutely.
Does it mean that equity culture per se is shrinking?
No, for equity culture, I will look at market cap as a barometer, and that is not shrinking.
That is not shrinking.
The participation into equity markets is not shrinking. Just that you have a lot of options which have come up. We were not having private equity. Similarly, the smaller companies which were coming in hitting the markets, they have an SME exchange for themselves, for them to get listed there and manage a little bit there. So I think we have a widening of market on that front. It's only the listed market which actually keeps, what we keep typically saying is that when anyone asks the question, how does the market look like, we always mean the listed equity space.
Right.
I think from that perspective, that market is shrinking. We also coming back here, we also look at one more aspect. If on an average, if I talk about that, if an IPO pricing is going to be somewhere, say, around 300 rupees for a company which is coming and hitting the market, after the listing, the pricing could be, and I'm being conservative here, the pricing could be 250 or 400 over the next 1 year. Now, if I am an equity investor and I'm investing into that kind of an IPO for a 1 year more, what's the kind of returns I'm going to make there? Instead, there are opportunities as an investor, or at least for an HNI that is available, is to invest and participate in the unlisted space and take the journey of 10 rupees to 300 rupees of its own, exit out in the IPO market, and I've made my entire great journey. Those options were not available earlier.
They are now
the options are more. Retail investor, unfortunately, will have to suffer because of the fact that he can't participate in the unlisted space so very easily. And therefore, you have IPO or the post-listing mutual fund route is the only option left for him.
Tell me one more thing, Apoorva. A person individually participates in an IPO, according to me, of an expectation of a quick gain.
Yes.
Okay. That quick gain is not materializing.
It is not.
As you mentioned, a lot of them have fallen flat.
Absolutely.
There has been an erosion of up to 90% of the wealth that was invested at that point of time. So instant gain, which from our perspective, conservative perspective, is itself a bad expectation.
Absolutely.
Does it mean that the mindset of the retail investor is getting corrected to that extent that these opportunities are not available? What do you see in your consulting experience?
I think if the sooner the investor understands it is not easy, it is better for the investor. What typically happens is that if you subscribe in a very good IPO, you will get very less allotment. If you subscribe in a bad company, you will get the full allotment.
Right.
So your weighted average loss is always going to be much high if your call goes wrong.
Right.
So for you to be a successful IPO investor, you need to be a successful IPO investor in 8 out of 10 companies. That becomes a very tough call for an investor.
What has been the shift in mindset of institutional investors on IPOs, Apoorva? One last question.
So they continue to subscribe, but they are also very selective. Let me put it this way.
Quality paper matters.
Quality papers do matter.
Right. So here we are, IPOs in India. We have a trend where IPOs, as we see, have been going down. The initial public offerings available to the public. If it is going down, it's because of a market reaction. A market reaction, according to us, of the IPOs having not fared well and the equity investors having burned their fingers. Does it mean that the route of raising funds as far as IPOs is concerned is shrinking? While the answer is yes, but there are other pre-IPO funding routes available, as Apoorva was discussing about. It would be good if IPOs go hand in hand with ensuring that the public makes money. But if the public doesn't make money, the IPO route is going to suffer. And that is also reflecting on the listings of companies going down, not just in India, but globally. So the next time you have an IPO, think carefully before you invest and see that your expectations are not one of instant gains. These don't seem to be materializing. This is Akhilesh Bhargava signing off together with Apoorva. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.